Good morning. My thanks to Tracy and the entire Payments Canada team for continuing to host the most relevant payments conference in Canada. This is our second virtual one, folks. I'm hopeful, very hopeful that next year we'll all get together. But for now, we're dealing with the impact of the COVID pandemic. And one of the many streams that's hitting through our society is around how COVID has accelerated digital reinvention. And as we've experienced this through the last 12 months, we've seen the impacts it's had as we all become virtual. We've seen the increased use of digital payments growing 40%. We've seen the decline in some of our traditional payments around check and cash declining 20, 30, 40, 60% in the case of cash. And as we've been watching this, I've been thinking back, I've seen this movie before. I've seen this stimulant that came in and accelerated a plan that was in place, but drove it to go faster. And I got a little nostalgic about that. And I've been working with my partner, Akil, on this for about the last 6 months. And the story begins in New York City. So here's the situation. It's back in November 2016. I'm coming to the end of a 2-year assignment in New York. I know what I'm going to be doing in the next year. I'm coming back to Canada. I'm going to be mobilizing IBM's response to the Payments Canada modernization blueprint and how we're going to help out the economy here. But before that, I've got one last client duty, which is to host a client visit in India. And I remember the week it happened, and I was brutally disorganized, and it was last minute run to the airport. I get to India. I don't have any cash to tip my driver, to tip the doorman when I get to the hotel. So typical standard, just run up to an ATM. It's not working. I said, no problem. I'll use the one at the hotel, get to the hotel, run up to the ATM. It's not working. And I'd been behind on my RSS feed. We were 3 days into Prime Minister Modi's demonetization of the country, in which he killed 90% of the nation's currency. What he did is he took out the 500,000 rupee notes. So normally that's the 10s and 20s in our society, but in buying purchase power, it was like taking out the 50s and 100s. And it came at a time when the country was going through a modernization program that was very structured, very organized, very much like the one that I was going to be coming home to in Canada. And then, somewhat surprised to almost everybody, this happened. And at the time, the reasons were stated for doing this were there were 2.5 reasons. The first sort of political reason given was to go after this cash economy. My colleagues at the time told me it was a 92% cash economy in India, and that black market activity and make it taxable. The second stated mandate was to deal with the counterfeit currency problem in the country, which shocked a lot of people because nobody really thought there was a prolific or deep-seated counterfeit currency problem in India. And then somewhat after the event, it came out, oh, this will be the trigger to digitalization. And that's the one that proved true. Now, when we look back 5 years later, there's been so many scholarly reports written on this. We really didn't kill too much of the cash economy. It didn't really kill any of the black market. It didn't really kill, but there was this massive accelerant to the digitalization of the country. Overnight, the proverbial hockey curve in the uptake of digital payments, digital transactions happened. And as I said, there was a program in place, a very steady. And when we look back at the growth curves of digital adoption for the country, it was sort of mid to high single-digit growth, very planned, very orderly. November 2016, the hockey stick kicks in, and we go into hyper growth. And there are some of the lessons there I think we learned, because that's what COVID's doing to us around the world again. Our banks, our companies, ourselves, we all had a path to digitalization, and now COVID has accelerated that. And now we've got to adapt to it. So for the last 6 months, we've been kind of going back and talking to the people who were there, getting their anecdotes, getting their thoughts, and saying, well, what can we take from that event that happened 5 years ago that drove the same sort of outcomes that we're experiencing now, and what can we do with it? Here's the 6 catalysts that helped India leapfrog in this digital adoption curve. Demonetization was the catalyst. There was programs in place that were all very organized, but it accelerated it beyond belief to the point where we're now doing 3 billion digital transactions monthly in the country. You also see that this wasn't just one part of the economy. It wasn't just the banking. It wasn't just payments. It was the entire economy had to come together to make this happen, and that includes government. And the rollout of a biometric program called Aadhaar, we're now at the point where 99% of the 1.4 billion citizens of India are uniquely identified. And that unique identifying is coming into the digital world. Financial inclusion turned out to be the purpose, the motivator. While the government started on this, I'm going to get corruption and crime out, it very quickly became a country unifying goal to include all Indians in this digital economy. And one of the greatest things that the government did was introduce what's called a Jan Dhan account. It's a basic banking account that brings in the more disadvantaged parts of the Indian population into this digital world by giving them access to it. There are requirements for it, some means tested, but you have to have your Aadhaar identification. You have to have a RuPay debit card. And that combined with a low-cost sponsored checking account has put 360 million previously unbanked people into the same digital environment that the rest of the more privileged citizens in the country enjoy. You can't do all of this without access. And now we're into another set of stakeholders here around the mobile, around the internet providers that would enable this digital transformation. And it's clear that we weren't going to rely on landlines and, you know, half a dozen seats at a public library or an internet cafe to serve 1.4 billion people. And in the 21st century, that access was going to be mobile. And so you see an incredibly progressive use of the spectrum within India. You see incredible usage. 11 gigabytes is the average monthly consumption of an Indian user through the Jio Telecom company. And the price of access, that smartphone, has dropped incredibly within this country. A brand new phone will get you in at $125. That's still a lot of money for a lot of the population of India, but the secondhand refurbishment market, it's got a slight crack, has now got us to the point where 800 million smartphones are now connected. And so you walk through this whole story and you see that it requires all elements of this to come together in a common plan with a common purpose. So what lessons can we take? You know, it's obviously we're not in the same situation as India, but there are human lessons that were learned through this whole process. And as we went back and we talked to some of the folks who were there, we heard a phrase that we had never heard before: frugal innovation. And that one kind of got scratching. We've heard about creative innovation. We've heard about lateral innovation and blue sky thinking innovation, but frugal innovation isn't a phrase we'd come together. But in hindsight, when you go back and you say, we had a perfectly funded plan, and then it got accelerated. It's not like there was going to be new money thrown at this. There was no new budget allocation for NPCI to accelerate any of these things. There was incredible human need and there was great market demand. So how do you make the most of what you've got? And as we dug into this, you know, we stumbled upon this wonderful algebra of innovation that says we get great innovation when we have a hard deadline, when we have scarce resources, and we have unbridled optimism of a dedicated team. Those three things, when put together, we get innovation. And when we look back at the history of India during that demonetization period, there wasn't any more money. There was an immediate need. So deadline was right upon us. And just talking to the folks who were faced with delivering upon this challenge, you can feel the optimism they had. It says, This is of national importance. We're going to make this work. And so as we each try and accelerate our businesses into this new COVID, this new increased digital age, don't always throw money at the problem. It helps, but it's not the necessity. Do create the optimism and how jointly necessity will be the mother of invention, and we can find our way through. The other thing that we saw was this notion of incremental product development. I mean, truly, for all of these things to come to market and we get this digital literacy and this digital usage across hundreds and hundreds and hundreds of millions of people, you've seen from the previous slide, everyone's got to come. The government, the banks, the payments, the Paytechs, the network providers have all got to come together. And you can see this notion of incremental product development where all of the stakeholders that make up the solution came up together, as opposed to one getting there and then building interim gaps to, well, we don't quite have all of the digital identity, or we don't quite have all of the spectrum. It is better to do less with everybody than one person creating jury-rigging back into the rest of the system. The scarcity of resource problems drove them by necessity to utility models. And in our world, in banking and payments, we've been having a vibrant discussion about utility models for probably 2 decades. And the activity hasn't really come. For the last, let's call it 3 years, our friends at McKinsey have been arguing that within banking, to get our efficiency ratios in order, we have to be driving more towards utility models. And I can feel that coming now, that as the need to allocate more capital towards digital, it is leaving less capital around to fix any inefficiencies within our infrastructure. And as we go through that modernization towards this real-time vision, I feel it, especially in North America, driving us to that, be it utility models for KYC AML, be it utility models for sharing the costs and the results of counter fraud against our payment systems, be it for managing down declining payments platforms like cash and check. It feels different this time. It feels like, yes, we are more interested in making this happen. And if we look to countries where there wasn't a choice, like India was in their scarce resources and the number of utilities that we see there, there's proof that we can get there and it can help all of us. This one is obviously interesting, you know, a regulator that balances caution with progress. And I don't want to intone or allude to that the Indian regulator was scot-free in all of this and whatever it needs, we'll do. No, they're an incredibly cautious regulator. But everyone who was involved in these processes at the time where new entrants were coming into the market alongside the existing payments providers said there was a balanced discussion of risk reward and caution with progress. And that's something that we can probably benefit from as we go through the introduction of new members into this real-time economy. We've had a lot of the discussion about, well, it's important that they are as, you know, rigorous in their controls as the incumbents. And if we're going to learn something from the India experience, well, maybe everybody can come to a different level and focus on different parts of the equation and value in penetration and support of our economy and our corporations is as important as the security of the system. It's a very nuanced discussion. But again, necessity was the mother of invention, and there are lessons to be learned from that. It continues to be a made in India solution that's driving this. But there was a very proactive outreach to the world to get the world's best practices, to bring them into the solution. And that was with the payment providers, that was with the banks, that was with the telecom providers, that was with government. We saw all of this urge to go and find great ideas and bring them in. But the unifying thing is what Stephen Covey introduced to us 30 years ago, begin with the end in mind. Why are we doing this? And this is what we heard. For India, it was the goal of financial inclusion, to create the same opportunity for everybody in the economy to participate as equals. And that purpose, that common purpose, and reaffirming that common purpose across all the stakeholders in transformation does become the unifying glue that shapes behavior, that shapes action, that shapes results. I want to thank you for joining me today in this discussion. It is a little awkward talking about India right now, knowing that in the last few weeks they're going through a tough time. So this nation, these people have been an incredible provider for all of us in our industry. And so as I leave you today, I'd ask you for three things. In your thoughts and prayers, can think of our friends and colleagues who are in India struggling with this. If you have the means and if you have the motivation, financial donations are really helpful right now, be it through the Indian Red Cross or Rising Together or any one of the great verifiable agencies diving in to help with this. But maybe most importantly to the Indian friends in your neighborhood, your workplace, they're going through double jeopardy right now. They're dealing with COVID here, and they're invariably dealing with family members back home. Reach out, say hi, how are you doing? How can I help? Thank you for listening to me today. Have a great conference.